Welcome, Fuji. Good to see you. He knows the real name, although it's with the C instead of the K, but basically the same. Mm, mm. Welcome, Arnold. Good to see you as well. We got some interesting price action. So, yeah, DD Darko, and the second D is for my last name. Yeah, it's not publicly known, but yeah, people, yeah, it's not a secret as well. But it's like a pretty unique name. So if people know that name, then you quite easily find me. But welcome to all the people in the chat. Crypto David as well. Teachels, Dad again. Yeah, indeed. Yip likes to call me by my normal name, but he's free to do so. But there's no big advantage to be publicly known for me, so not screaming it off the roofs. Okay, so more people will join. As always, happy to see you guys. Love to see people also be active in the chat. And if you have any questions, just let me know. Then I'll go into the price action because we have had the FOMC. Let me delete this a bit for clarity. Where we followed the plan from like 2 weeks ago by making that one through the third drive higher and then going lower. So the idea was right. However, there was not a really clean trigger for my system to get into a short because we basically have like structure was, if you count from the low up, higher low, higher high, higher low, higher high. So right here, the break of structure level was this level, the main one. So we basically had a weekly low on Monday, weekly high on Tuesday right here. And we made it high. And then also like internally, there was not really any structure to break bearishly right here. After this high, which was put in on Tuesday, we basically started to range here where there was no obvious distribution or anything. So no short trigger for me. And that was also a bit why I was leaning towards price taking out that high again, because then we would distribute, or at least take out the high, which would give me something to work with, and then I could open shorts. However, for me, like I usually don't take trades like this with the stop right there and then this. This is more swing trading. It can work definitely, and for a lot of people it work. But I like to have my entry tighter and that I can de-risk earlier. So yesterday we had the move down, broke 2 hour structure back to bearish, and are now accepting back in the value area high of the range we have been in since when? 6 Feb. So since 6th of Feb we are in this range. And the similarities with the former range are crazy. Also, like, is it? Yeah, here. So here we also had that 1, 2, 3 move above. And I remember how awkward or at least awkward, how hard to trade that model was as well. Because here, let's play it a bit through. Like here we also had like move above, higher low, higher high. So this was the obvious market structure level. And then we made the high right here. And then price also like started to trade sideways without giving any really clean short trigger. A lot of people, including myself, thought, okay, take out that high and then you can move lower. but then you see that price broke aggressively back in the range. And then let's see what the value area, I'm not sure if it can load it from here. Yeah, so here price broke aggressively back in the range, and then it was holding the value area high for a moment, where it started to range, if I remember correctly. Yeah, so a little range, which then broke down. At that moment, the value area high of the range was lost, and that's like your trigger that the deviation is fully confirmed. And if you accept back in your value area high, then oftentimes you rotate to the other side of value, which is the value area low. So price here had an aggressive break, then never gave a retest of the obvious supply, which was located here. So this was the obvious retest, and then price went down. But price instead ranged here for a while, and then already broke lower with a really small redistribution right there, like a model 2, with like 1, 2, 3 little rounded bottom, and then it started to break lower. And you can see that price never really gave any obvious retests. Then a little range right here where we swept the highs and then went lower. But the moment we started to accept back in the value area high, we basically had like only ranges that people were looking to long all the time. But none of the ranges worked out, and it just instead aggressively dumped lower. So since the similarities with the last range are so obvious, and we broke back in the range aggressively, this is like that obvious supply retest. Prices had a range above the value area high, now breaking below the value area high. Which means to me, like, there's a big chance that we also here are not gonna get the obvious retest, and that we could also just like continue lower and lower without any good retest levels or ranges. And that's why I'm really cautious. Like, I know a lot of people are probably looking at this range to long it, but I'm cautious with it because keeping my context in mind, it's cool to just nuke lower. So right here we have clean supply resting above. That's where I'm interested in shorts, also because we have some VWAPs right there. And this could be the range low, range high tap 2. But yeah, the downwards momentum is pretty strong. So then for me to long a low time frame range like this, I often want to see price go up, have the time displacement, and then have the tap 3. And then maybe if we have a good return to zone, that I then want to long the third tap. But I don't trust this second tap, so I'm not gonna take a long here. I'm gonna wait for more clarity. You could technically look for, because price had the local low, lower high, lower low. This broke back to bullish. So technically a model 2 can be in play, where you then can look for your higher low in this demand. For like 1, 2, 3. However, I think this is a bait, and I will not be surprised if we take out the low again. So I'm personally not gonna long this, just because of the overall context, and I think this can roll over. So I want to see more before taking longs, else I'm just more interested in short, but I'm also not gonna short it here. I can only short if we take out the local range high, especially, and even better into this supply. And otherwise I'm just gonna wait for maybe a model 1 is even cleaner, because we still have quite some liquidity resting down here, which we can see here. Like basically all these lows are higher lows, and they all took liquidity and then moved higher. So this is from here. This is basically all liquidity right there. And you can also see that the moment price started taking that liquidity, you are going down pretty heavily. And the funny thing is that you can see it on the chart. So this is just all sell side liquidity, but you can also see it with like order flow. So if I zoom out a bit and show you the heat map, then you can see these more colored yellow, and that's like there are liquidations. And we already took quite some here, but you can see that the curve that I just showed on TradingView with all those higher lows, that's exactly also where the liquidations lie. So that's why those curves, it is people use that as their stop loss. And that's why it's colored yellow right here. But you don't necessarily need this data to know that it's liquidity, because the chart itself also tells it. However, it looks pretty heavy, so I'm more interested in shorts. I'm also going to delete this range because I don't trust it. And if we look at the VWAP, so you can draw VWAPs from important swing lows or swing highs. And then you can see that since the start, the move up here, price stayed above it, then retested it right here, retested it right here. So this is like the overall uptrend. Here we held above it for a moment and now broke below it. So that means that basically all these lower time frame trends are all pointing lower, which is the same if we pull the VWAP from this high and from this high, then there are also pointing lower. So the problem that many people make right here is that they see price moving down here, and then the only thing they see is, okay, I need to long because I'm already too late for short. So I'm gonna get into longs and then take like a bad trade and take again a loss and a loss and a loss. While the former range showed us that it's never too late to get in. You can always, like, it's not wise to short here and put your stop there and then target this. But eventually price will stall. And if you get a better range, or at least some sideways price action, then you can look for long back into here. And that's basically where I'm gonna look for shorts. So main plan is to wait for kind of a range formation down here. Also because 9 out of 10 times, if you have a move from this low high, this is pretty aggressive with just a rollover. And price never, like only in a full bull market, it will V reverse. 9 out of 10 times, price needs to stall out, that sellers get exhausted, price ranges, and if you then form like a rounded bottom, then you can get that bounce play, and then you can look for the levels to reject from, which this is super obvious level, and then afterwards basically this whole zone right here. So I'm just gonna wait for some more clarity, but seeing this price action, to me it screams that it's either gonna continue lower or it needs to start to form a range. So either push up, push down, and then watch from this range, or like move lower and then start to stall sideways, and then it looks healthier to from there get that bounce. So for now I'm not rushing into anything. Because basically trend is down. So then to get into longs, you are counter trend trading, and that is always more dangerous. So let's see what the lower time frame. Yeah, I think we're gonna take out those lows. Let's quickly look at the chat. Welcome to the chat, everyone. Can these two depths be divergence? Price action and machine volume are in divergence right now. What do you think about this? These steps can be a divergence, but yeah, what's a divergence worth? It can be the bullish divergence, but depends on, like, you will find on a time frame a bullish divergence. But for me, structure is more important than any potential divergence. So this can be step 2. This is range low. This is step 2. But yeah, context wise, for me, it's, if you look at this, then it starts to look already like just market structure, where we have low, lower high, lower low, maybe internal bounce, this. So often important to zoom out and then see what the bigger picture is, because if you zoom in, then it can always look like a good range. But context wise, to me, I think this low is gonna take out. It's the same as the range, right? Like yesterday, from low to high right here. Then you can also watch it from, this is tab 1, this is potentially tab 2. However, it's at a weird place. You just came out of a strong move down. So then you need to have really clean triggers to get into a long. And then locally, this can look like a range to play. However, if you zoom out, then it needs to be either super clean or just better to wait. And right now, I think this will just continue lower and then from here start looking for a range with then tab 1, tab 2. That's what I personally would look at. Let's quickly look at the normal. Yeah, so we have weekly VWAP above us, some gaps. We took out the daily POCs on the, we had resting below us, so that's all taken out right now. And right now we are reaching T level, so you see that there's basically nothing below. So if for liquidity reasons market makers wanted to push price down, then there was a reason to take out these levels. Below current price, there is not much resting. So either, it's also the reason why I think we either hold like the 68K zone and then potentially bounce from there towards here. Or if we start breaking below 68, then there's basically nothing to hold price up or anything until like it is low. So pretty important levels coming up, but for now the momentum is clearly to the downside. Then we can watch what is, like, some shorts are entering, but as long as price is going down, they have a free ride. So you can watch what is the lower time frame. It is not loading for some reason. Yeah, some shorts are entering right here. But until you clearly flip structure back to bullish, then shorts are the easier way. So yeah, probably they're gonna have a chill ride until you clearly flip structure. So maybe this is 1, this is 2. If we then go down 3 and then flip structure, then you can look, are there trapped shorts? And then that can give maybe a reversal higher. But for now, this could just roll over, which we often see with Bitcoin. After once it finally starts going, then it's like kind of a dead bouncing ball where you just get bounces and then lower until you get a new range. Beside that, we can have a look at the statistics. Oh, I'm locked out, so we cannot look at them right now. We can have a look at ETH. Look, ETH has also a range. made the taps with the low tap 2. This potentially tap 3, tapped into the mend, but also here, I don't, like a range should be sideways, and this is more just a slow bleed down. So I'm keeping an eye on it, but also if you look at it, if you zoom out a bit, then is this a clean range? Then I would say no, so I'm gonna delete it as well. And then ETH is at a super interesting level. Like, if you look at it from the range, just as with Bitcoin, and ETH made a much stronger breakout. Basically here, this was the range. And then ETH had a strong breakout above the deviation threshold. So then technically you would expect a retest continuation. However, BTC is always leading. So then you should keep that in mind. But ETH is now falling back into, what is it? 6-hour demand right here, overlapped with the value area high. So this is a super important level. However, this looks awfully a lot like a deviation in the making. A big deviation, but still looking pretty heavy. Also, the way we are coming down, it's not looking too good. We even have 4-hour bearish internal structure. So you can say this is your 4-hour bearish market structure level. And currently at a key level, so we can watch what the reaction is. But overall, this looks heavy. And below this local demand, this is like only sell side liquidity. So if you lose this demand, then it's just probably a very quick move to ship $2,000 because there's nothing to hold price up here until this demand at the range POC. Then this is the 4-hour bearish market structure. And then we also have like here low, lower high, lower low, lower high, lower low. So here you can mark it out. If you really want to long, for example, then mark out your levels. Then this is your 30-minute bearish structure. So longing now is going against almost every trend. So then you can look, okay, do you have 5-minute structure? Well, we had a 5-minute structure here. Technically broke bullish, but watch how you came into it. So then I will not use that because this is just super weird. So I would say this is more important level. But you can watch what happens from here. So for example, low high. Then this is a key level for ETH to hold. So this is a level where I would look personally what is going to happen here. And it could potentially give a trade worth taking because it's a level where you either hold or you nuke. But overall, this looks super heavy. You can watch for some VWAPs if we are holding, for example, the low from here. Okay, that is still holding or can be retested from this low. Then we currently are at that level. So from the start of this uptrend, we held VWAP there, and are now holding near it. And then from the upside, we have the high from there, and we should put source to high because we pulled from high to low. So that's bearish. And from here, for example, so yeah, it looks pretty heavy. And bulls really want to defend this level. So it is a level to keep an eye on, but for now on the lower time frame, I don't really see anything to trade. Like the whole week has been more quiet for me. Last week was wild. This week I'm not seeing that many trades. So that's the ETH view. Solana is basically, like most coins are pretty similar. So let's clean it up a bit. Okay, here I marked out the range, but it was also less valid. So here we have range tab 1, tab 2, 3, Y of model 1. Then price broke structure. Was it valid 1 hour? Yeah. So broke structure back to bearish right here. Basically confirming the model. So now the technical target is the range low right here. Then this is all pure liquidity, basically. Only sell side liquidity. So I'm super interested in shorts. However, also here the obvious retrace is into this level to look for shorts. But if we follow the fractal of last time, also with like Bitcoin, then this could already be like the lower high for lower low. And here, yeah, it's like super key. So if you lose current level, this is all, there's nothing to hold price up below the current level. And that's why if you have an aggressive move down, it's always pretty risky to see every first low as your range and then only look at accumulations. Because oftentimes you get like low, high, and then this was basically your, instead of a accumulation, you had tab 1. This was like kind of your tab 2 or your deviation. And then price came back to feel a bit of that imbalance. So this was basically your 1, 2, 3 before down. So it's likely that this was just a redistribution range before lower. Although it was not really tradable, I think. Let's see. No, not really tradable. Like if this breaks now below the deviation threshold, which it technically we have to extend it there. Yeah, so price is now breaking the deviation threshold, which means that it's likely to get a move down. Then you can look for shorts here before further down. Because this is basically a range. At least how it starts to look right now. Range. We are losing the range, so this could be the range, mitigation, initiation, mitigation, continuation, the ream sheet. So let's see what price leaves behind. We have a imbalance and a level right there. So this is also basically all supply. So then I would look for shorts on the way up, just to write the trend down. Step right there, breakdown below. This could already be the bearish retest before lower. But overall, this looks yeah, more interesting shorts on this than in longs. Is potentially at like the mitigation right here. And then I would, like if we get a move back into here with local weakness, and then a redistribution like this, which would be the perfect play. So chances that we will get exactly this is pretty low. But then you can like short it there, break, stop above that high, and because you only have liquidity till at least this low right here, liquidity, that could be your target with the demand below it. So then this would be the trade. I can look for confluence because this was our range, which now looks to be turning into a supply range. So range with a purpose to redistribute and go lower. So then we can pull the volume profile from here till the breakdown level. And the optimal reversal or retest level is your point of control, which is there, and then go down. But you can see that price here already retested the value area low and is now rejecting. So it could be that price is already going down, but I'm gonna put some alerts on Sol to look for potential shorts, just playing the local trend. I Yeah, so I think Sol is cleaner. I would not really like to short ETH, for example, down here. That's not worth it. I would be more interested in longs on ETH, but Sol just lost its local range, so that's pretty shortable for me. Especially since if this was 1, this 2, this basically 3, and this is your clean invalidation, the tap 3. So then any move into here, you can basically short it with your stop above this high. And then target 84. So I'm gonna wait for that. ETH looks like to breaking just lower. BTC is taking that low, almost. So glad I did not pull the trigger. We have gold. What was it? Here, it was 5% down on the day. So I'm not sure what is happening with gold. But the Model 1 we were looking at early this week definitely did its job. It took a while for it to play out, but we had the 1, 2, 3, and then even the extreme liquidity grab right here. So this was basically the 4th tap. Model 1 flowing over into Model 2. Then it took a while for it to reach the technical target, the range low, after some chop right here. But it did its work. And you can also see this, like, if this is your range low, this is your range high, and this is tap 1, tap 2, tap 3. So this was basically a redistribution, and then price started to go down. But I did not expect it to nuke from that little range more than, what is it? Like since the range breakdown, almost 10%. That is quite a move. And it also, we had some good demand right here, but it just sliced through it. So I'm waiting for more price action. Basically watching this mega range, range high, range low. Main interest at the range low. And then see if we locally get something. But for me, this looks down. I need a range. This is too, I cannot work with this. Or you can watch for trend continuations. Maybe if it tests this level. Which is, okay, that 30-minute supply. You could watch for like now a move into that level. Up here, high, higher low, higher high, higher low, higher high, higher high, break. Like if you have this, then you could look for a local redistribution, 1, 2, 3. Internal break of structure. And then take the short on that boss. Stop can be at that high because you mitigated supply. And then you can target the low or like trend continuation. If you target the low, which would be like the main target, then from there you can watch it from low to high and see if this is your new range. That's for now the only thing I see on gold. So I'm putting an alert at the low right there and at the high. Then BTC, it needs time. Sol plan is clear. ETH is doing ETH things. Gold is the new shitcoin. It looks like it. What is the S&P doing? Okay, so this also, like yesterday we had the FOMC, then it sold off heavily and it now took out the range low into demand. So that's interesting. So you have range low. This is potentially tap 2. Then hourly structure is low, lower high, lower low. So we have hourly structure right here. And then we have also hourly supply right here. Range supply above. So like a range, you should always be bearish at the highs and bullish at the lows. So this is not the place to become overly bearish, although it looks pretty heavy on the high time frame. And also this move is pretty vertical. But what you can watch for here is like, is this step 1? Is this step 2? Is this potentially going into a step 3? So what you then want to see is price verbally bouncing back a bit, then coming back down, and then watch for either the Model 2 or the Model 1. And then watch, like, can this maybe give a new breakout? So here I'm going to also put an alert at the low, alert at the hourly market structure. Do we have locally some levels? Okay, I put my alert at the 50-minute. This is hourly structure more important. Then we have supply, hourly supply right there. And then just wait. Yeah, so this is taking the low. And then I have 2 more coins to watch. It's Hype, which was had that crazy wick to the upside. Then I was saying I wanted to see at least 50% of the wick be filled and then look for shorts because I think this can be the high. But then price just shoot up, took out that wick, and from here sold off. So I think this can be the top for a while. However, yeah, it was pretty hard to trade. For me, it was not to trade, so I was also not looking to trade it. Now price took demand right here. This is supply left behind. Let's look at the higher time frame. So we have a lot of demand on the way down, of course. This is demand. It's also demand. Price took liquidity above these 2 highs. Exactly. and it broke 4 hour back to bearish right here. This is the bearish boss. We also have some demand here, it seems. This demand was broken. So my POIs right now are this demand below and the supply above. Then what we can do as always is like price ranged right here. Then it broke up. So we can watch for a RIMC, or at least for the volume profile of this. And that's everything. Then the POC, as we know, is the optimal retest level. So that is right here. So that's a strong level to watch for bounces. And we can watch for the confluence from this high to that low. And then the POC is right here, so that's not really giving an edge. Okay. What is the VWAP from this high? It's going there. And what are the VWAPs from the lows? This one is broken. From here, it's also below it. And from here, it's gonna retest it. So from here, it's pretty interesting because if you look at the start from this trend, you had tab 1, tab 2, tab 3, here more or less. So retest of this level, if you then get a range with like accumulation signs, then it can be a long back to here and then see what happens. Because on the high time frame, this is still a strong uptrend. And we have a 4-hour break of structure. And 4-hour is the highest. 6-hour is right here. Bullish structure. So technically, if you respect the trend, you could look for price to stall here, form like a range, and then continue, or at least make a move to this supply, and then watch for price action. So that is the plan for hype. And Tao, to close it off. First I said like look for that potential accumulation, but I already said like a move this aggressive into a potential third tap is not what you want to see. That's more showing seller strength. So that's why I said be careful with forcing a setup right here. And it formed a really local Model 1, only to flow over into a Model 1 distribution, which was a picture perfect example of what I just did with the other coins, where you have a range, then you break down from it, then you can pull your volume profile from the start of the range till your breakdown level, and then the optimal reversal point is the retest of your POC. Then here it was slightly front end, but you should take it like a zone instead, not a fixed level, but more of like a zone. And then price had a redistribution into that level. It was also near the value area low. So this was basically this was the breakdown. This was the retest. This is the continuation, aka the RIMC. This being our range. This the initiation, mitigation, continuation. So this was a bearish range. And right now price is retesting this range demand where we consolidated before the strong push up. So my best guess is that we potentially can look for longs here and shorts here. Lose this.
Short van met Corby wordt nu op Spotify afgespeeld.
Wat is this? So I think we, for a while, will stay between these levels, lose this demand, and then it can be a very quick rotation back to the former levels. So also here, I think it needs more time to form a proper range. You here tapped in some demand where it's bouncing from. But overall, like 30-minute structure is down. So this is like 30-minute structure. Also here, I think price will do this, maybe push up a little, then come down, and then look at it from a range perspective. Potentially with this your low, this your tap 2, and then watch for potential accumulations for a bounce into there, shorts from there, and just play level to level. So also here, alerts are set. I hope the alerts go off when needed. And then, yeah, I think it's just either you wait for your range to be formed and then look for accumulations at the lows, distribution at the highs, or you play like the local trend, which is to the downside, which is always easier than trying to fight the trend, which is what like people in nature like to step in front of the, or at least almost everyone is now looking to long it, but the easiest way is to go with the trend. Not saying it's wise to short here, but like this New York Open pump could have been a shorting opportunity where you mitigated the supply. Probably I see it right now. So here we had a gap. Here we had these candles going up, gap, price fills supply, takes liquidity, sells off, sells off. And what is another trick to not be trapped into longs too early is to like the super trend, this super basic indicator. You can, for example, look at the 50-minute, and here it was flip-flopping. So if it's bullish, it's blue. If it's bearish, it's red. And then in a range, it will flip-flop. So in a range, it doesn't make sense to use it. But when you have the start of a trend, so from here, we see it flip-flopping a little bit here. But basically from here, we see that it is resistance all the time. It gets tested here, reject, tested here, rejects, tested here, rejects, and now it tested as well. So then you can watch, okay, for 15 minutes, it's just bearish until proven otherwise. Then if you really want to long, you can look, okay, for 10, but on the 10 you see that it's less clear. So now you know, okay, 50-minute is super clear because that's getting rejected each time. Wait at least for price to or break above red, or for price to start going sideways, and then you will see that there's also some blue coming up, which is your signal that if this starts to flip-flop from red to blue, then it's the signal that you start to form a range. But right now, this tells you this is a downtrend. So longing against this downtrend is often not a wise decision. Or at least it can play out. It can look good for your P&L card, good for your ego to catch the long, but it's highly improbable to work in the long run. So that's basically all I have to say. Let's watch. The volume profile tip is great. Definitely going to start doing that for retest. Yeah, it's amazing. It's really, really, really good. Like I have, I don't have yeah, like there are a lot of examples. Basically, always when you have a range and then a breakdown, and you pull your volume profile, then price loves to just grab liquidity, and it's often the most around that range POC and then go down. And it's also the best RR level to look for reversals. So yeah, definitely something to keep an eye on. Then yeah, for me there's not much to do. I'm gonna wait for a little lower and then the range to be formed, and then play it from there. So either range formed at the lows right here, or wait for price to come into supply. You have some pretty clean levels, but then it's important to not do anything stupid in between. Like this is super obvious first supply level. It's value area high, VWAPs, structure probably. And here down we have also like a lot of liquidity, fib levels, demand. So just setting alerts and waiting for them. And often when you have trending it like this, then either you stay zoomed out to not get trapped, or you zoom in to play like the local trend. But watching the local all the time without zooming out can give you, yeah, it can trap you into thinking that you get a reversal on each green candle. While if you zoom out, you will see, no, this is not looking like a strong bottom. So I don't need to have FOMO. Then I want to wish everyone a great day. And tomorrow it's already Friday, so the end of the week, but we'll be streaming again. Hopefully we have some sideways price action, and then I will play the local range, maybe with some relief into the weekend. So we'll have to see. For now, thanks everyone for tuning in, and if you have interesting charts, interesting setups, questions or whatever, feel free to send them in the Discord. And then I'll see you guys there. So cheers.